Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I have one of my sponsors with Amex Exploration on today. I think that Amex, and they don't pay me to say this, but I consider it a unicorn pick because of the quality of the project. Their Champagne zone is phenomenal. It's got over I think 800,000 in the measured and indicated at a 16.2 gram per ton average grade. If that doesn't make it unique, I don't know what does. So there we go. Thanks for joining me today, Victor and Aaron.
Yeah, thanks for having me on. Always a pleasure coming on, and I can't agree with you more. It really, I mean, the unicorn here is that Champagne zone.
Yeah.
831,000 ounces at 16.2 grams per ton, and you've got another 100 and some odd thousand ounces also at 9 grams and change, but. And by no means is that zone closed, right? So we're still going to continue exploring it, and the other thing is also finding other ones. I have a hard time believing that it's by itself that
Well,
there's going to be.
another thing that really impresses me about the Champagne zone, and I kind of picked up on the potential of it early in the discovery, and is the unique continuity of it. It's so unique in this kind of a system. They're in orogenic gold systems, folks. These are very deep-rooted systems, and generally they're more like lenses of mineralization in a system. Whereas this one has continuity that basically starts right from the start, near the surface, and it's been traced for, I think, 1,200 meters of depth. And it's so unique that an expert on it wrote a peer-reviewed paper about how unique this Champagne zone is. So I guess that's makes it fair for me to call it a unicorn, Victor.
Absolutely, and you were onto this one from I could from way the beginning of it. The
I
minute
think
we put,
2018 was when I
yeah,
first
absolutely.
interviewed you and Kelly Malcolm.
That's right. That's
Yeah.
right. Absolutely. Yeah, no, that was you were onto this one when you saw the zone, like obviously your knowledge of geology, and you picked this one right from the beginning. So you picked this one. I mean, even trading where we're trading back then, we were trading at 8 cents. So it's,
Yeah.
it's 40x,
Yeah. And it's
50,
been
60x,
higher.
40, 50, 60x. That's right.
Well, what I saw back then was I saw that even in the first few holes, the potential for continuity and
Yeah,
that it could connect at depth. It looked to me like on either side of that dike that there was a potential for this thing to coalesce at depth, and the continuity sure kept on going. And another that's what often happens, Victor. I had a great mentor in geology once told me that, you know, every project starts out big with a big geochem or a big geophysics, and it gets smaller and smaller as you drill it. He said,
yeah,
but mines are different. He said they get better and better the more science and drilling you throw at them,
that's
and you
right.
get pleasant surprises along the way. And the Champagne Zone has continuously had pleasant surprises, even up till lately. When you
Yeah,
converted the from inferred to measured and indicated, the grade actually went up because
that's right.
there was more density to the drilling. That just doesn't happen very, very
No,
often, folks.
no, no. No, that's right. And one if we jump into the recent press releases, when we were doing, I'll let Aaron go explain it, but it was we basically had one of the best grades we ever had, and that was geotechnical drilling. I mean, the area we were going into, we were expecting gold, but it was unexpected the amount of gold that, the grade that we got there was pretty was pretty amazing. And it actually what it shows is look at the continuity. Look at, like there's going to be a lot more when that zone is open, there's going to be a lot more gold being found there. And this is proof of it, right? You put a hole, you're putting a hole for rock for rock mechanics, and here you go. Look at what you get. So I'll let Aaron go deeper into that press release.
Yeah, I really want to go into that a little bit more, folks. Like, when you're doing the plan here, and we'll get into this, is to do a bulk sample, and you're going to put a ramp into the zone. And so when you do this ramp design, you're actually coming through the country rock and then into the zone. And you have to do some drilling to see how the rocks are in the ramp to going towards the zone that you want to bulk sample. And in their case, those geotechnical holes actually hit a barn burner of a result. Aaron, do you got some of the statistics? I think the news release was October the 21st, so just a couple of weeks ago, folks.
Yeah, it was 213 grams over 3.75 meters, I believe, from off the top of my head. So, and one of the other kind of cool and important things to note there was we actually sent off the whole core this time. So obviously, typically, usually have to cut the core in half and send off half of the core, leave the other half in the core box as a witness, obviously. Something that Victor hates doing because considering we have such epic amounts of gold in the Champagne zone, obviously when you cut the core in half every time, you're obviously losing a certain amount of gold in the core cutting process. That and the fact that it's obviously more of a representative sample when you're able to send off the entire piece of core. So because it was in an area that we already had enough information, and we already had enough information in, we decided to send the entire core off, and so a more representative sample, and you can obviously see the grades that came back. So pretty
Well,
special indeed.
that brings up a topic that I'm very aware of because I spent a lot of my career in diamond exploration. And in diamonds, you're looking for something very small in a drill core. And in fact, it's usually the diamond indicator minerals that tell you about the because diamonds are so rare. Think about it, folks. In a diamond, you're looking for something that's only zero point 0.2 of a gram is 1 carat diamond. So if you have a big ton of rock and you poke a little hole through it, you chances of hitting that actual diamond is very difficult. Well, nuggety or these high grade systems have a bit of that problem as well, and you can actually see it in the images that Victor has behind his shoulder. Behind his left shoulder there, you see some beautiful chunky visible gold, right? So say you cut the other side of that. Well, you might not get that visible gold because the other side is what you sent to the lab. And so if you had to send the other side, you'd have this high grade, very high grade result. And so it just like in diamonds, in these high grade systems, the bigger the sample, the better. And even it goes down to the core. If you cut half of it, it would be better if you could just send it all in. Even better is when you get to do a bulk sample. And I think that that transition, Victor, where you started to communicate not only the bulk sample, but the path to near-term production has been sort of a eye opener for a lot of people that follow the company. And so yeah, I'm a little I would be just like Victor, send it all in.
Well, well, look at those chunks of gold there, right? So again, I'm not a geologist, right? But you take a saw, and as you're going through it, it's flakes. I mean, not a flake, but you're gonna get gold going in the air, which you cannot scoop up the floor and put that in the bag. right? You have to leave it alone. And the thing is, yes, the rules are the rules. We follow the rules all the time, 100%. In this case, we didn't drill for assay results. We drilled, it was real for geotechnicals. So it says, well, what do you need the witness? Why do you need the other half for? Send it
Yeah.
all in. Like, why are we going to slice this thing? So that was really what it is. I mean, all the other ones, yes, they're cut in half, and that's so the holes you see, the core you see behind me. We have that at the core shack. When you come up one day, we got to go up and look at it. It's quite it's that dramatic to look at it. It's really really nice. It's these were the metallurgical holes, and that's nice, right? Because you're going in with PQ. It's
The
the
larger diameter.
yeah, it's a larger
Mhm.
diameter, so you're picking up more of the gold. So you actually inside white quartz, like you see it a lot better.
Well, you
I've actually even had people ask me, "Oh, what do you guys do with your core cuttings?" And I'm like, "Oh, well, typically we have a truck that comes and pick up the big bag of core cuttings and takes it to a proper place to obviously to dump it." And I've had people ask me, "Oh, next time you want to throw out your core cuttings, can I take them? Because I'd like to process them." So you don't have that happen too often at many projects. So.
Well, it just goes to show you. I mean, you sent in the whole thing and you get all the recovery of the gold from that full core. But even the what happened with the transition from inferred into measured and indicated, now, folks, what you're doing instead of like, I'm just throwing numbers here. It may not be accurate, but instead of having 50 meters between your holes, now you start poking holes in between those 50 meters, and that's how you transition from an inferred, so you've got these wider holes, and then you tighten up the core density. And when they did that, the grade went up. And that is indicative of bigger samples are better. And so I'm really glad. I was excited when I heard about the bulk sample plan. And then when I found out that it was going to be a production ramp that goes into the zone, even better, because now you're like doing pre uh, uh, mine development with a bulk sample to boot. So I'm really excited about that work. I think it's pretty spectacular that you can do that.
Yeah, no, absolutely right, Alan. I think 2026 is going to be an exciting year for Amex on site at Perron. Expecting to get the obviously the bulk sample permit has been submitted now with the ministries of mining and forestry and environment. And I think we'll, kind of expect if, the normal timeline follows itself, expect to have that permit in hand by roughly beginning of next year. And then obviously the mining contracts and everything will be handed out. So 2026 is shaping up to be a very exciting and busy year on site. There'll be a great influx of people into town in Normetal. So I think it'll be exciting for the town itself as well. And then that's on the production front, or the bulk sample rather. And then yeah, big exploration program to continue as well. So
Well, that
and
brings up another thing, folks. This another thing that makes Perron so great is that it's, well, you brought up two subjects. One, it's literally right beside the town of Normetal. Like it's 10-minute drive outside the town of Normantel, and you're at the drill rig. And so that's one great thing. But another great thing is it's in the province of Quebec, which is the most mining one. I think it's the best mining jurisdiction in the world, and exploration, and they're very much behind promoting that. And so, yeah, Victor, you really couldn't have picked a better place to find the Champagne zone and other zones, folks. I talk a lot about Champagne, but Champagne is sort of the opening of the project that then you can bring your other zones that are in the resource around it into production through the profits of of the initial mining. Why don't Victor, can you tell us a little bit about that plan to near-term production? Because it's a great story as well as part of Amex.
Yeah, absolutely. If you want to put up the Gantt chart, I can. I it would be great, Aaron, if you
Yeah.
want to put that up.
Oh,
It see
here,
what comes
Aaron,
up.
I got to give you the ability to share your screen. Hold on a second. Just give me 2 seconds. Allow. There we go. Okay. You can
So
share
what
now.
Perfect.
what's
Yeah.
important? What's really important with this with this business plan is that you're mitigating, and I'm going to go in more detail about it, but you're actually mitigating the risks both on the financial and also on the technical side of it. I get asked the questions about the team and, well, mining is not easy. It's tough, this, that, but now just think about this, right? So I know we talk about phase one and phase two, but there's also another phase before that. It's called the bulk sample. So when we build the bulk sample, like you said, Alan, it's going to be a production size ramp. So a production size ramp, the decline, the portal. So when you're mining that bulk sample, it's actually here test mining, like you've actually started it. So if there's any issues, you're going to see it right away at the like. So you're mining this as if you're mining normal. Now, while you're doing all this, so
And by the
presumably,
way, I'm going to interject there if
yeah,
you don't mind,
absolutely,
Victor.
yeah.
Folks, a lot of times what happens in an initial mine is that you run into problems. It's just you're dealing with Mother Nature, you're dealing with rocks, and so getting it into full commercial production, there is a learning curve along the way. And what Victor is getting at is by doing the bulk sample, you're actually learning about those and being able to deal with them even before you start the mining process.
Absolutely. So, construction, we're expecting that bulk sample permit, at the latest, it'll be sometime in Q1. I'm actually hoping it comes in way before that, sometime at the end of this year. And then you got your 15, 16 months of construction. And in 2027, it comes out. Like you'll get your ore and you'll be able to sell it. Now, we have applied for 40,000 tons. Maybe we'll get 40,000, maybe we'll get 20,000. But just to put things in perspective, also, Walbridge got 35,000 tons back in 2017, 2018. So it's not like we're asking, we're well within our limits. The limit in Quebec is 15,000 tons or 1% of your M&I. Like our M&I is 8 million. So we would have been able to get we is 8 million tons. So we would have been able to ask for 80,000 tons.
80,000. Yeah.
Yeah, so it's we're pretty much within that. Um, so then while you're constructing, we got our feasibility study going on for phase one. We're trying to get all the authorizations. Like the BAP, the BAP is an acronym. The AP in the middle, that stands for Audience Publique, which is public hearings. Now you got to think that we're we're gonna do public hearings for something that we've already been permitted to take out the bulk sample, which is test mining. So I'm really not expecting any issues at all there. On top of it, you've got the First Nations really backing up the project. The both communities there that are really backing up the project. And one thing that I've been asked all the time, well, yes, it really sounds great, everything you're saying here, but why doesn't everybody just do this? So this is a great plan. Why
Because
doesn't
they
everybody?
can't.
Because they can't, because they can't. And it's not just a grade. I could have found this kind of grade, somewhere totally remote, and I got to build roads and I got to build like it wouldn't be feasible because you're beside a town, beside a workforce, high grade hydroelectricity. That's why you can do this plan. And then, we're expecting by 2028, we should be in production. Our average for the first 10 years is going to be 112,000 ounces. that's when you would need $146 million. Like, when was the last time you heard somebody can go into production with 100,000 ounces a year with $146 million? And don't forget, it's not just $146 million, it's less than that. Because the $30 million for the portal, that's already a sunk cost. I don't need it. I'm putting in a production size portal. In 2027, if I get the average grade there, the diluted grade is going to be about half an ounce there at the where we're going to get this bulk sample, the average. So you're looking at producing 20,000 ounces, a little over that, or a little over 10,000 ounces if they only give you 20,000 tons. That's anywhere from 50 million to 100 million dollars of
Wow.
revenue. That will go against your 146 million on top of your sunk costs already. So it's really and this is where you've mitigated it. This is where you've mitigated it on the financial risk, because you're doing this in steps. So I don't have to dilute like crazy and big
Well, to put
and
that into context, Victor, you and I have been around the business a long time. Just go out there and look at mines that are being built these days, folks. It's at the low end, it's 250 million.
yep,
At the normal end, it's around 500 million. At the upper end, it's over a billion.
that's right.
And so to have something that low capital cost to build it has a lot to do with the these things that Victor just highlighted, being right beside a town. I mean, literally the power system that feeds the mine not far away is at Casa Berardi is actually right beside the town. Oh, there you go. There's the transformer station, folks, and look at how little distance you go to that other map. There's a transformer that goes to Casa Berardi. And where's the project? I saw in the map before you could see the
There.
entrance road. Uh,
The project's back up. The access road is just here, so it's about 7 to 8 kilometers up this access road.
so there's
Um,
the town of Normantel, folks, and then there is literally the access road is like what under 10 kilometers from the town.
so you can see here. This is the town here, and then only, yeah, seven, not 7 kilometers, and you're at where all the proposed infrastructure will be going for the eventual mine.
So when
So we're
Victor talks about we can do it where others can't, this is one of the key reasons they can do it, folks, is because of its close proximity to Normatel. And to put that into context, Normatel was built for the Normatel mine. So this is a mining town, literally a mining town, folks. So yeah, and then I'm going to tee it up a little bit for you, Victor. There's mills underutilized mills in close
Absolutely.
proximity of the house. So why does that matter, Victor?
Well, that matters because if you want to do the business plan that we want to do by toll milling, you want the toll mills in proximity. And you've got the Casa Berardi mill just north of us. It's 88 kilometers. That's my preferred place to go. They will have capacity between 2028 and 2032, and you're going up mostly a forestry road. So that's pretty. But aside from that, you've got Holt Holloway. Um, just you have Holt Holloway there. There's McEwen Mining is in Timmins. There's Northern Sun Mining where Osisco Mining sent their stuff, which is not far from Holt Holloway. So that's everything on the Ontario side. You come on the Quebec side. There's the Westwood facility. There's you go to Val-d'Or, and there's our partners there at over at Lamac. So there's lots of, so nobody could hold you hostage, right? You can negotiate with obviously we'll have our preferred places to go, but there's lots of optionality of where you want to send this. Again, if you were somewhere really remote and whatever, so what do you do with it? Like, so yeah, we're quite fortunate with that. It's really finding a project that can really grow.
And
But
that opens up the other part of your business plan, which is to start with toll milling for a few years. And you folks, I hope you notice this. What Victor was talking about is doing a bulk sample is a pretty substantial amount of money due to the high grade nature of the Champagne zone. But because of that, you could use toll milling that would only add a little bit of extra cost for your trucking, and you ship the material off in a toll milling operation, and you use the profits from that to then build a mill on your property. Did I get all the steps right, Victor?
Yep, absolutely, and you're not losing much there. There's a page where we show what our AISC is at what our AISC is. It's while we're toll milling. Um, yeah, it's not that one. You've got it just before. There's our AISC there. I know it's 1,165, but and then for phase two, when we do our own, it drops down to 1,027.
Wow.
So what I'm saying with that is that we had to do a trade-off study there. So if we end up toll milling, but we don't have to put up all those capital expenditures at the beginning, and you toll mill, then you get revenues. Then that 191 million that you need for phase two, you're getting it from your
Free
revenue.
cash flow.
Yeah, you're getting it. You're getting
And
it from cash flow.
look at those numbers, folks. That's another thing that makes it unique. The average cost of a miner these days is somewhere around $1,600, all in sustaining costs to produce an ounce of gold, which makes the gold miners free cash flow machines when you're selling it for close to $4,000 an ounce today. But in this case, you're coming in a toll milling operation at $1,000, just slightly above $1,000 per ounce. So that
Yeah,
creates the kind of free cash flow to then build your own mill.
that's right. See, a 1 gram deposit, for example, you wouldn't be able because we've put in our costs. We've put in our costs per ton around the hundred. I mean, if you look at the difference here in 1,165.
140 bucks.
And
Uh-huh.
140 dollars. I mean, a gram of gold is what, about 180
Yeah.
now?
Yeah.
Like you're pretty much wiping out everything. If you've got a 1 gram deposit, you're pretty much wiping this out. Oh, and actually it's in US. A 1 gram deposit in US dollars is like 120, 130. So
Yeah.
you'd be wiping it out.
Wow, that's just amazing. So another thing that makes this project unique is these numbers that Victor is talking about, and then they're moving these from a preliminary economic assessment. They're also doing a feasibility study to make these numbers even tighter. And who knows, by the time you do that, Victor, we might be looking at $5,000 an
Yeah,
ounce
look,
gold.
yeah, look at these numbers. So actually the one just before that, Aaron, it shows everything side by side, a lot clearer to see on the, yeah, you see, so you've got your average operating cost there, your all-in sustaining costs, per unit in ounces. So those are the same numbers there, just that it's clearer here in a graph. So it's pretty amazing this. And if we go to the next slide, where, I mean, look at those numbers at 34, you're at $3,400 gold. I mean, we're way above that right now. And you're looking at your post-tax NPV at 1.8 billion. Like we're trading at $370 million. Like
Wow.
you got a 5-6x potential here on something that's very limited downside. And the reason I say very limited downside is that, if you look on the right side of this and look at $2,000 gold, it's still look at these numbers. It's still a two-year post-tax payback, a post-tax IRR of 47%, and your NPV of 659. So when you want to do that ratio, your post-tax NPV ratio over your capex, usually two is good, four is fantastic. Anything above that is great. When you take your 659 over your 146, I mean, it's
So
great. It's
two
great. It's great
months.
numbers.
Well, and that goes into a study that I've recently done, Victor, is I try to break everything down to the valuation of a company relative to 100,000 ounces of gold production. On the low end, you get about 800 million. On the high end, you get over 2 billion per 100,000 ounces of production. I do this so that my audience can better understand, well, what's the metrics between a big producer or a junior or a mid tier? So by breaking it down to 100,000 increments, it's easy to sort of compare along that junior to major. And yeah, I mean, I would argue that it would be in the high end because of, look at this, folks, at $3,500 an ounce, which is about $500 an ounce cheaper, you're paying back the capex in 3 months. So
That's
think about that.
pretty impressive.
That's free cash flow enough to pay back all your capex in 3 months. After your capex is paid off, it's all gravy after that. And
Yeah.
that's free cash flow quarter after quarter after quarter. It's no matter how you slice this thing, Victor, it is unique. And to tell how unique it is, Aaron has some good stuff to talk about because
Yeah.
you just announced a 100,000 meter drill program.
Yeah, that's how he's going to end up increasing the ounces there. Just one thing I wanted to add here on the ounces. He's going to be talking about it, but how he's going to increase the ounces. But not all ounces are made the same. When you got 2.3 million ounces, property wide at 5 grams per ton, that's impressive. That's really impressive. And within that, you've got almost a million ounces at a half an ounce. In a body that's really, really continuous. It's quite impressive. And this is where like where I always try to stress, talk about that and say, guys, you can't just look at a number. You need to know where those ounces are. Are they economic? Are there nasties in there, meaning on the metallurgy? Like when Aaron will go through the metallurgy is amazing. And those are all the boxes you need to check. You need to check all those boxes. One thing that we didn't, sure, we said we're near the town of Normantal, 800 residents. You'll probably get some workers there. You're not going to get all the workers from there. But then you have the town of Lassar, which is 23 minutes south of it. And I say I like to use time wise, say 23 minutes south because anybody living in any metropolitan city, 23 minutes is nothing. It takes me like I live on the island of Montreal, and to get downtown every morning, it's 45 minutes. It's 45 minutes to an hour
Oh,
every
you
single.
got it good, Victor. When I lived and worked in Vancouver, I lived in Langley. So it was only about a 40-minute, 45 kilometer trip. It used to take me on average about an hour and a half
Yeah.
each day, both ways, folks. So I don't
So
have that in trouble anymore because I work out of my home office now, Victor.
yeah, so just imagine that now. Now you've got a town with 12,000 residents. It's a skilled workforce because they send workers up. The majority of the workers of Casa Berardi come from there. And remember, Casa Berardi is 88 kilometers north of us. This town is south of us. So workers do over 100 kilometers a day back and forth. I mean, they're bused and everything. But so a workforce is important because I don't need a mining camp there. That workforce can go back home every single night. They don't need, if you're a young family with, your young kids, I think you want to be home at nighttime to tuck them into bed or take them to hockey or doing their homework with them or some, like you want to be with your family. And,
Quality of
Casa
life.
Berardi does it.
Quality of life is
Yeah.
important, and folks, people are an issue for a lot of projects because you're remote, you go in for 2 weeks, you come out for 2 weeks. Those 2 weeks you don't get to see your family. You have to sort of interrupt your life all the time. So to attracting people is really important. And what Victor touched on there is that quality of life. 25 minutes, you're back to your house, you go back to bed in your own bed, no need to build a big camp. And this all goes to that low capex to build the mine, folks.
That's right. That's right.
Yeah, that's great,
And
Victor.
And the exciting stuff is going to be Aaron's going to tell us how he's going to
More
find a lot more
ounces.
ounces. I gave him a good budget for it, so
Yeah,
he's got enough
you
of a budget
did.
for over 100,000 ounces, so 100,000 meters. So
And it's paid
no,
for.
that's
You've got the money in the bank, Victor.
money's in the bank. We just raised 37.25 million, and it was Elder. I mean, this is very telling from El Dorado that they literally loved the project when they came in and they were at 9.9. They were 64%. If I look at the financing, they were 64% of the financing. They went from 9.9 to 17%. So
And they
that
put
tells you
in that recent financing, they put in, what was it, $17 million to bring themselves up to about 17%
50%.
ownership
Yeah,
of.
absolutely. They exactly they went. That's why I was saying they were 64% of the total fine. The 37.25 million that we raised, they were 64% of that because it's
So, folks, it's not just me that's excited, or the guy who wrote the scientific paper, the peer-reviewed paper, or Victor and Aaron. It's also El Dorado is putting their cash into this. They do their homework, folks.
yeah,
And that on its own, I think, speaks volumes as to why I call this a unicorn project.
yes,
Yeah, and I was just going to mention as well, Alan. I mean, the obviously the one of the numbers that stands out so much in our PEA is the payback period, like Victor was talking about. But we're just obviously very fortunate to be working with a zone such as the Champagne Zone with grades well in excess of 10 grams per ton that allows us to go forward with this strategy, and that's really what makes that payback period so quick when you're shipping material that's well in excess of 10 grams per ton. That's obviously what pays the project off so quickly. And just quickly as well, while we're talking about the Champagne Zone still, because there's pieces of it here on the award that we just got given last week at the Explore conference in Montreal, which is held by the Quebec Association of Mineral Exploration. We got the Discovery of the Year award here, even though kind of the discovery was made quite some time ago. But anyway, a lot of other criteria goes into it: project advancement, number of claims, size of the property, grade, accessibility, all sorts of stuff like that. So, a few pieces, obviously hard to see on the screen here, but a few pieces of core from the Champagne Zone, from actually the PQ size core as well, and it's sort of like chock full of gold. I know it's hard to see on the screen here, but it's chock full of visible gold. So it's a
Oh,
very,
they,
I'm gonna get in trouble for holding it at my house here for too long. I'll have to bring it into the office this week sometime.
well, you bring up another subject there, Aaron, which is that folks, when you're these orogenic gold systems, they have very deep roots. And what that means is they keep going very deep. In the case of the Red Lake mine that made Goldcorp famous and made Goldcorp, was they had to go down 1,000 meters before they got into the bonanza grades, and then it continued for another 1,000 meters. But drilling that from surface is very difficult. So by going into the Champagne zone and start mining it, it opens up everything from let's say even 800 meters. You can start doing very dense drill core for a lot less money and open up what's 800 meters and down and bring that into the resources as well. So again, folks, it's one of these things where there's always pleasant surprises along the way when you have a project that turns into a mine. And I think from day one, that's happened with, oh, there you go, Aaron. Thank you. You
Yeah,
can
no,
take
you're
it from
absolutely
here.
right, Alan. And like you're saying, like so far we've defined the Champagne Zone, which again is this vertical body that you see here. Starts from 75 meters below surface, is defined all the way down to 1.4 kilometers vertically, economically now as well. Actually, the resource shell goes down to 1.7 kilometers. So this is the actual mine plan, the actual stopes out of the PEA down to 1.4 kilometers. And all of this has been done from surface. So pretty impressive to
And what
find a
you're
body.
seeing there, folks, is the underground workings. Now, this is a ideal situation for an underground mine. It's like the spine of your back there. You got one side the spine, and then you shoot off into the ribs, the ribs, if you will, and that opens up your mineralization. So for an underground operation, you don't have to go all over the place to hit that. Victor, we're running out of time on you. Do you got a
Yeah, I was yeah, I'd have to go. No, I was actually just plugging in my. Sorry about that. I just got the notice that my computer's about to shut down.
Okay. Uh, so,
And what
Aaron,
and kind of all we're pointing out in between the yellow and the blue here is what's to be mined out in phase one in yellow during the toll milling period, and then
yeah.
everything in blue and the open pits is the remainder of the operation once the mill is built on site at Perron. So,
So
and like you say,
what
Alan,
we've
the
talked,
final depth of this champagne zone, anyone's guess. So
and folks, we've talked a lot about the Champagne zone, but that kind of doesn't talk about the rest of the zones. Those other are in the
Yeah,
resource estimate, and those will be part of the plan going forward to get to those others. But the idea is you're kind of paying for everything and making a lot of money mining champagne, and then you can start mining these other deposits. And
yeah.
there's even potential to find more deposits, folks.
Oh, absolutely. Look, Aaron, if you bring in the long section with the pink, that's
Oh, that's a beauty. Look
so
at
so.
that, folks.
Look at there's no drilling. Sometimes people ask, well, why haven't you drilled there yet? Or look, I'm the drill bit's going to tell the tale at the end of the day. But really, it's because we've done over 500,000 meters of drilling, and that was really to define the
Resource.
champagne zone and turn it into a mine. I mean, when you're hitting those kind of grades, you're going to end up having a mine. So that's where we concentrate in there. And when you're talking about going to depth and finding the bonanza zone, so obviously the drill bit's going to tell the tale. But what's really interesting, and Aaron could go deeper into that. So you have the Champagne zone and you have the Denise zone right
By the
beside
way,
each.
folks, all of those purple dots are
Yeah.
what are called gram meter intersections. So you multiply the the grade times the meter intersection, and that gets you all those purple dots. So you look at all those purple dots in the Champagne zone, and the right beside it, it's you just really don't see this kind of stuff very often, folks. That's phenomenal.
Yeah. And what Aaron and the geological team, they're curious to find out what happens at depth where there's a good possibility where the Denise zone meets the Champagne zone. And maybe that's where you're gonna have a bonanza zone. Obviously the drill bit will tell the tale, even if they
Well, it's
even do meet, but
certainly you
it
look
looks that
at
way.
the Champagne zone, folks, and the Denise right beside it. The only thing that separates them is a dike.
Yeah.
Well, where did that come in post mineralization? And does those two, as you go deeper, they certainly are trending towards each other. And I always that was always a question for me, Victor, was does this thing connect at depth? Because if you connect it at depth, you've got size and grade potential down there.
Oh,
Like,
absolutely. And you're building all the infrastructure. So it's getting closer and closer. They believe at some point, is it a 2 kilometers? Is it a 2.5 kilometers where they probably meet? I know they would want to poke a hole in there right now, but when you're talking about a 2.5 meter, sorry, 2.5 kilometer or 3 kilometer hole, you might as well wait a few years and wait till you get down there. But who
well,
knows?
because
Maybe at
then,
some
Victor,
point.
you can put not just one, you can cut about three-quarters of your distance off, and you
That's
can
right.
put a bunch down there.
That's right. And also accuracy also, right? Like you want to, the shorter the hole is, the more accurate you could be. So the easier it is to get your target. But the fact that we went down to 1.6 kilometers and you're still getting 1 point, you're still getting a 10 gram
10 gram meter hole. Yeah, you're
yeah.
still getting those purple dots, folks. They keep going.
That's right. So I'm Aaron's gonna give you all the exciting thing what's going on here. I gotta jump off, but
No worries,
like
Victor.
usual, it was a pleasure. Always great being coming on with you. And as we put up more and more press releases and meet milestones, would love to continue coming on.
It's you're penciled into the schedule, Victor, and have a
Thank
great
you.
rest of your day. And
Thank
thank you
you.
for being a sponsor. Your sponsorship helps me to do the work I do and provide it to my audience. So, on
And you do
my
great work.
behalf and my audience's behalf, thank you, Victor, and have a great rest of your day.
Thank you. Thank you.
So, Aaron, you're
Yes,
going to
sir.
be a busy boy with your 100,000 meter campaign.
I sure am. I sure am, and that's in addition to the 10,000 meters that we're currently drilling as we speak, with two drill rigs on site for the remainder of the year. So, yeah, we obviously put details out on that in the last press release on the 10,000 meters that we're currently doing before Christmas. And then, yeah, very busy period of drill planning coming up for myself and my geological team moving into next year. So,
This is a
yeah,
great map, folks, because that stuff on the Ontario side, that is new ground that Amex was able to secure. The Perron part is on the right side in the Quebec side, which is everything we've been talking about. But the geological potential of that trend goes into Ontario, and now they control 35 kilometers of that key trend.
yeah, that's exactly right, Alan, and perhaps a reminder for everyone as well, just in going out very regionally of the looking at the entire Abitibi region. You can see in blue all the major important structures or deformation zones in the area. And as you can see, all the obviously every yellow dot on there is either a active operation or a historical gold operation. And as you can see along our belt, the Jacoby Deformation Zone, there's no gold dots on there. In the past, was thought to be a VMS only producing belt. Obviously, we're located right next to the old Normatal mine, which ran from the 30s to the 70s, mined down to a depth of 2.4 kilometers. So you can see the copper and zinc grades there of solid silver grades as well. But obviously, we've put that theory to bed of it being an only VMS only belt with all the discoveries that have been made at Perron now. So
I
very
hate to interrupt
underexplored.
you again, but I see something that just pops out of the page to me, Aaron, which is okay, folks, on these orogenic gold systems, you need cracks in the earth. And in geology, we call them deformation zones, shear zones, faults. And these are the cracks in the earth that open up the rock so that the fluids that carry the gold from, let's say, maybe 10,000 meters deeper has a path of least resistance to make its way up to the surface. Now, Aaron, what's standing out to me is when I look at a fault, I often look for bends in the faults because these are brittle areas where the rocks are able to be better prepared for that fluids to make their way up. And I find it really interesting that you've got one curve going up towards your red dot, and then a big bend that goes into Ontario. Can you tell folks why that matters? I think it matters.
Yeah, no, absolutely. I mean, definitely stepping back more regionally, an important feature to be looking at for sure. So, um, you can see, some of those other similar features on some of the other belts that, where some of the existing deposits that are currently being mined have some similar features. So regionally, definitely something to be looking out for. And then if we come back again to the project itself, and actually this map is a good one as well. Was one of the things that really drew us to the acquisition of the Perron West property to start off with as well. Was so the first step in the regional deformation was that all the geology has become verticalized. So if I come back to this one again, our Younging direction is to the south. So the older rocks are up to the north here. Younger rocks are down to the south. So we've got the sediments of the Jacobi system to the south. Then we've got the volcanics of the Normantel South Block. We then have our Beaupré rhyolitic dome, which you can see here has got all the gold dots there. So that's all of our known zones there. And then the volcanic complex to the north, which are the oldest rocks. So everything became verticalized. And then the D2 deformation event, which we're trying to point out here, was a compression and rotation of the belt. So this little diagram here is trying to show the dextral movement. So essentially just a rotation to the right off the belt surrounding this pattern Pluton that we have in the middle here. So that system was rotated to the right. All of the rocks around it were then dragged along the contacts of that pattern Pluton. And so kind of one of the things that we're investigating now is starting to look at the shadow pressures surrounding the pattern Pluton, of which the Beaupré block on the Quebec side, which hosts our 2.3 million ounce resource, is located in the eastern shadow pressure to the east of that pattern Pluton. So what do we have to the west of the pattern Pluton and the shadow pressures surrounding it on the Ontario side? So far from
Folks,
early observations.
Aaron threw out a lot of geological terms there, but I'll try to break it down. I'll try to translate geospeak a little bit for you folks. When you look at rocks over millions of years, things happen. You get pressure compressing rocks, you get movement of those rocks, and all of these events are important when you're considering the rocks being prepared for those fluids to then make their way up into in a path of least resistance kind of a scenario. And so when he talks about compression and pressure and movement, this is over millions and millions and millions of years, folks. And it is preparing the rocks for those fluids to make their way up into. Did I do a good translation there for you, Aaron?
That spot on, Alan, spot on.
Good.
And
So
and
basically, you see the pink, the dark pink, I guess, right beside the lighter pink. That's good. Thumbs up.
that's right, that's right. So as you know, the Perron West acquisition that was done earlier this year, still obviously early days with the project, but from the data that we picked up from the previous operator, in addition to the field work that our team has been doing out in the field this summer and autumn. So that's what fall, I should say. We say autumn in Australia. Is that we're starting to see geological similarities between the rhyolites that we're seeing out on the Perron West side and the rhyolite that we have in the Beaupré block on the Quebec side that hosts all of our resource. So early days, but exciting first observations, and kind of a lot of these historical showings that were already on the property. So 7 historical gold showings, 5 historical copper showings that really haven't been followed up on a lot, matching up really nicely with some of the this was the gold from the that ripping drill hole from the geotechnical stuff. So you can see here an example of some of the soil anomalies are matching up with the rhyolitic stratigraphy really nicely in close proximity to an existing gold showing from an old sonic drill hole from 1987 that had 1.7 grams in the first sample of bedrock, which doesn't sound like a lot, but when you're getting 1.7 grams in your first sample of bedrock, matching up nicely with some anomalous soil samples, and no follow-up drilling has been done on it. It starts to become a compelling target. So a
So
lot of
this
examples like
is
this.
this okay, so this is on the western claim. So folks, why this is important is that you look at the different colors of rocks there. It's not a coincidence that as you get to the contact of two rock packages, here is another area where the fluids have a pathway, and it's not a coincidence that you're hitting those kind of occurrences in close proximity to the rock packages contact.
Yeah, that's right, Alan. And like I was mentioning before as well, obviously this belt has been very underlooked at for from a gold perspective. So both on the Quebec and Ontario sides, I've seen historical drill logs, black and white, handwritten on paper that have been scanned and put into the Ontario and Quebec systems, but that I unfortunately don't know where the drill core is. I wish I did, because a lot of examples I've seen of metric quartz veins, sometimes with sulfide mineralization, that weren't even sampled, because unless the geologist back in the kind of the Falconbridge days saw massive sulfides, if they didn't see massive sulfides, they weren't interested in it,
And they're
and they didn't
gone.
didn't believe in the gold potential here, so they just threw it out. Or I don't know what happened with that core, unfortunately. So a lot of potential existing here in this belt.
So, Aaron, of the 100,000 meter program, what is sort of the mix between Perron East, Perron West? What's the mix up looking like?
Yeah, good question, Alan. That's still something that we're working on determining. So, as we're starting to get the final results from our field program out in Perron West on the Ontario side coming in, finalising the work report on that at the moment, that'll give us another layer of data to be able to refine the drill targeting over on the Perron West side for a maiden program out there sometime next year. Obviously, all of our zones on the Quebec side as well remain open for expansion, whether that be at depth or along strike, depending on which zone we're talking about. So there's multiple opportunities for the drill program next year, expanding the known ounces at Perron on the Quebec side, as well as regional drilling both in Quebec and in Ontario. So the balance of that we're still working on determining at the moment, but should have more details by the end of the year.
And Champagne is where you've done the bulk of your deeper drilling, but earlier we were looking at a map and you put a circle below the other zones, and some of those zones, folks, they were just the target was just to prove up or establish a resource. As you can see by that circle, there's no drilling below that. And as you can see at Champagne, that zone keeps going for another 800 or more meters from the bottom of that drilling in those other zones. So, how this all plays out at depth is still remains to be determined.
Yeah, that's exactly right. And that question does come up a lot. Why haven't you guys done any deep drilling out to the west here? And it's simply because we haven't gotten to it, because the Champagne zone was just so rich and so continuous, quite easy to track and to follow as well. That it was a system that you couldn't really shy away from. So much focus and so much effort has on into defining that zone, like we said, economically down to a depth of 1.4 kilometers now, and the resource shell down to 1.7. But by no means of the imagination are any of our zones out to the west, such as Gratier and Grey Cat, the central polymetallic zone. They're definitely not closed off. We just haven't done any deeper drilling out there. So
Even
nothing
in the
geologically.
Champagne zone, folks, you
Hmm.
notice at some of the end of those holes, the mineralization didn't stop, the hole stopped, and you're still getting pink dots down there at the bottom of those holes in the Champagne zone. So even the Champagne zone is wide open still as well.
Yeah, no, that's right, Alan. Yeah, we just don't have a lot of information down here, and then obviously continuing down below at depth as well. So, just obviously starts to become quite expensive drilling that deep
Of
from the
course.
surface. So, probably going to make more sense either once we're underground with the bulk sample or in the phase one toll milling to then put in an exploration drift and to continue drilling down at depth in the Champagne system.
Well, even if you
But
go about 400 or 500 meters up from your two circles and sort of at the edge of your big circle, you look at some of those holes and I see pinks right at the very end of the hole, a little more up into the what? Yeah, there you go.
mm,
I see stuff like that that tells me that's still open over there too.
yeah, it just hasn't been drilled yet. So no, a lot of potential remains on the property in a lot of areas. So nothing in all of these zones out to the west, nothing geologically suggests that any of this mineralization stops. We just haven't done any of the deeper drilling out there. So yeah, we're just getting started at Perron, even though it's been a good 7 or 8 years of drilling now. I feel like on this belt as a whole, we're just getting started.
And that's the nature of a lot of these Abitibi mines, folks. They start out with sort of a game plan. Okay, how are we going to get this we've got something. How are we going to get it into production? And then after that, you keep doing more drilling to add more resources to keep them going. So something that starts out with a 1 to 10 year mine life, or a 10 year mine life, in the Abitibi, they can go on for decades, folks. And it's a bit of an arm waving experience, but I don't think it's a stretch to think that this could be one of those situations. Would you agree with that, Aaron?
No, you're absolutely right, Alan. I mean, obviously, we've defined the 2.3 million ounce resource. We've now got the PEA in place that shows a 17 and a half year mine life, which is already, the beginnings of a generational type mine that'll have families moving to the area, like we were mentioning before, and really bring a lot of activity back to the town of Normetal and the northwest area of the Abitibi. But as we were saying, we feel like we're just getting started here, and really the dream, the pipeline dream, is to eventually not just turn this into a singular mine site, but obviously a mining camp and have multiple discoveries on both sides of the border and be able to feed that into the mill that will eventually be on Perron and keep this going for decades and decades and decades. So that's really the pipeline dream.
Well, and that's on a business plan perspective, Aaron, that's very exciting because folks, this is another reason why companies sort of do it in these staged approaches because once you build the mill's built. Now bringing in satellite deposits don't have to cover that threshold of is it big enough to build a mill? Once you've built the mill on the back of something like Champagne, then you can start bringing in these satellites. And from a business perspective, as a mining company, that's tremendously exciting.
Yeah, that's exactly right. And another good point. If you're to find at the moment that now that the mill is not built yet, and if we didn't have our resource, if you were to find a 50,000, 100,000 ounce little deposit somewhere in the area, it's not really economically viable. But once the mill is in place on Perron, if we were to find another body that, oh, there's only 50,000 ounces, but the mill is already there in place, so, 10, 15 kilometers away, just truck it over and keep feeding the mill, and Bob's
That's
your uncle.
another 6 months to a year's worth of production. And
Exactly
that's
right.
how these things evolve, folks, in the Abitibi. What Aaron is describing there is how these become camps that last for decades, is because they start out with that staged approach. And then because the rocks are so great and the mineralogy is so great, they just keep going and going and going and going.
Exactly right. So
So
exciting times ahead.
100,000 meters, Aaron, that'll give you some more information.
That's going to keep me very, very busy for 2026, Alan. That's for sure.
Awesome. Well, and it's not just busy with the drill rig, it's the busy with the bulk sampling, the permitting, the environmental planning, the getting towards a production on a toll milling, then permitting for a full mill. There you go. That sort of describes all these steps, folks, very well.
No, you're right, Alan. Starting to become busier and exciting times at Amex. We've just hired an environmental person. We're looking to hire a HR person. We're starting to hire all of our, starting to look at hiring our own engineers, geologists for on site for the bulk sample next year. So very, very busy period coming up for the company. That's for sure.
And Aaron, I always hear people, they talk about, well, we got a great team. And every company says they got a great team.
Mhm.
But I'm an actions speak louder than words kind of a guy. And what the market didn't like with the resource, I was actually very excited about because there was a lot of arm waving based on all the drilling you had done because you guys did like what, a 500,000 meters of drilling, and so everybody was arm waving and saying, "Well, the resource could be 500 million or 5 million or more," and but the reason that it was done the way it was done, and this speaks to the actions speak louder than words, folks, is they were constraining that resource because they wanted to quickly do a preliminary economic assessment. Now, I've seen during my career where projects can get an initial inferred resource that sits on the shelf and collects dust for 10 to 20 years, folks, where they never run economics on it. But the reason they did the preliminary or the resource the way they did was because they quickly wanted to get the preliminary economics run on it. And so when you do that, you can't have an arm waving resource estimate. You have to have one that's constrained to reality that will stand up to the preliminary economic assessment. And so, Aaron, that's just another example of the ideal way you guys are going about bringing this project forward.
Yeah, that's right, Alan. And obviously for us at Amex at Perron, we're dealing with a high grade, narrow vein deposit with, the bulk of the project will be mined underground as we were looking at before with the mine plan. There are a few small open pits on the project as well, but fairly modest in size. So this is largely an underground project, minimal environmental footprint. But with those narrow vein, high grade deposits, that does take a certain amount of drilling to be able to bring those ounces online. So versus a widespread, low grade, deposit with a large footprint, obviously you're able to build ounces at a quicker pace because you have larger intercepts at a lower grade.
But even
And
in
then
that environment, a lot of times, Aaron, it's widely spaced still, and it all reports to the inferred, and that's why some of these inferred resources, folks,
Mm,
collect dust for 10, 20 years before they have the economics run on them. And you guys were back to back. Within months after your resource, you had a preliminary economic assessment out.
Yeah, that's right. And I think another thing to always look at is obviously a capex of a project, with these lower grade, large open pit resources, sometimes at least a billion, sometimes even a billion and a half, $2 billion in kind of some scenarios as well, versus obviously our little 146 million to bring Perron online. So
Well, and in
we're
those kind of situations, Aaron, the capex was paid off in 3 years, not 3 months.
Yeah, exactly right. So, like Victor was saying before, not all ounces are created equal, and we really have some high margin ounces at Perron that can turn a profit pretty quickly. So, we're extremely fortunate to be dealing with a deposit like this.
Well, I'm a pretty proud guy with all the work you guys have done, Aaron. What brings me excitement is I recognize the potential on the discovery hole back in, I think it was 2018. And you guys have done a phenomenal job since then. You've drilled like a 500,000 meters and still, and this speaks again to my actions speak louder than words, folks, even though they've spent that money and have drilled that much drilling, the company still has a reasonable to modest amount of stock out. So what that tells you is that they're using their money wisely. Otherwise, they'd have a 500,000,000 shares out and a much lower valuation. So Victor, the whole team has done from the corporate down to the on the ground with the work you guys have done and Kelly before you. It's been a tremendous work, and again, it's one of my actions speak louder than words. And sometimes I just look at Aaron, to tell you the truth, sometimes I hear people say we got a great team and we're doing great work. I just look at the amount of work that's been done and the amount of stock that's been out, and that speaks volumes about actions speaking louder than words. 500,000 meters of drilling, folks. And I think that the fully diluted is still only about 150 million shares out, and that tells a story all on its own. And Aaron, since you joined the team, you've continued that great work that Kelly started, and good on you. And I'm glad to hear you got 100,000 meter budget from Victor to really roll up your sleeves on.
Yep, yep. No, it's very generous, isn't it?
Very much so, very much so. Well, did you have any closing comment, Aaron?
No, I mean, I think we covered things pretty well today, Alan. But I guess one last point is, when you've spent $125 million on the project, you know that that something's there, right? You don't spend 25 million dollars sinking that into the ground when you're not absolutely convinced that you have a future mine on your hands. So
Well, and you've
we're
got a pretty
obviously.
good endorsement because some of that money came from El Dorado, which is a much bigger mining company, and they like what they see. So, folks, I'm always a proponent of doing your own homework. Well, in this case, El Dorado has done a lot of homework too, and you get help from them as well, right, or Aaron?
Yeah, we have technical meetings every quarter. Their geologists often come up to site, look at a lot of the core. So they provide a lot of suggestions, recommendations for the project. So they obviously have a very smart and capable team of not just geologists, but geophysicists, geochemists, all the above to help provide suggestions for the project as well. So certainly great partners to have, absolutely.
So that trend of doing good work is going to continue long into the future, Aaron.
Yeah, absolutely. I think their specialist structural geologist, when he came up to site to visit Perron, he did mention to me that it was his, and he obviously travels worldwide and looks at projects for El Dorado all around the world. And he said Perron is his favorite project by far worldwide. So that's obviously a nice comment to have thrown towards us.
Well, we can thank the Mother Nature for being kind at Perron, and good luck to the big upcoming drilling. There's more drilling happening right now, folks. We're talking about 100,000 meters going forward beyond the 10,000 meters that's already being done.
Yep, that's exactly right. No, the drills will have a busy time ahead of themselves for the next foreseeable future.
Well, let's keep that truth machine singing for us, Aaron.
Absolutely, we will, Alan.
Alrighty, folks. As always, I'm an idea generator. I'm not making buying or selling recommendations. Before making any investment decisions, it's important for you to do your homework and speak with your financial advisors. And I really stress that homework. But I would also add, folks, that sometimes it's not easy to do that homework which is why I do these interviews. But in the case of Amex, all this data is out there for everybody to see. It's packaged up on their website for you to do that homework, and so I encourage you to go to their website and do that homework. And on that note, everybody have a great day, and we'll talk to you soon.